Of course, there have been recent events in the Nigerian banking sector. We've seen an increase in Amcon levy from 20 basis points to 50. We also saw a hike in the CRR for public sector funds from 12% to 50%. And to discuss development in the Nigerian retail banking space, we have Olumide Akindele. Now, he's the head of consumer propositions at Diamond Bank. Olumide, it's great to have you on the show with us. Let's get straight into it. As I mentioned, so many changes in the banking sector this year. It would be good to get your thoughts on how you think all of this can affect future bank earnings.
Good morning. Hi, it's great to be back on the show. It's been a very exciting and tough year for a lot of the banks this year. While on the face of it, profits are still high, but expectations generally have been dampened by the reduced results and profit warnings that we've had across the banking sector. As you rightly mentioned, we've had a lot of regulations, we've had a lot of new rules from the changes to the charges on the banking sectors to the 50% on the public sector requirements from all the banks. What this has just essentially done has made more banks think a lot more aggressive how they want to actually increase their income lines for next year.
Of course.
I think traditionally most banks have always focused on specific areas like the commercial side, the business banking side. More and more areas, and more and more banks are now looking at areas such as retail banking, because that's the way forward. We're a large population of almost 170 million, with almost 82 million adults, and a large proportion of them, 60%, are unbanked. So there's a huge opportunity in terms of looking at these new markets in terms of development and in terms of return shareholder value.
Yeah, so are you all starting to see consumers benefiting from this, though? I mean, are we seeing more consumer lending?
Well, not as great as we'd like to see, but it's changing. So there are two sides of the story. So in terms of consumers benefiting, cheaper charges, clarity in bank charges, more innovative products coming out, because obviously we now have to think about customers and what they need and what they require. On that side, we're seeing a lot of benefits, we're seeing a lot of developments going in that area. On the lending side, again, we are seeing more lending going in, not as much in comparison to the potential we can have in the market.
Now, there are concerns that, going forward, banks will face liquidity challenges. So is this something that we should be worried about?
I think not. I don't think, my own opinions, I don't think there will be it will be an issue. Like I said, I think the banks have woken up to the reality of banking going forward, and a lot of banks will look at more innovative ways of dragging income coming and also liquidity going forward. Like I said earlier, there's a huge untapped market. The banks just need to kind of strategize and focus on areas that will actually bring in more deposits, bring in more income, and therefore deliver shareholder value.
Now, even though, some people are talking about, those challenges there in liquidity, we saw 9 months Q3 results from most of the banks showing, revenues and profitability. Even though those were affected, we didn't see interest income being affected in any way. So do you think that in Q4, we might start to see interest income being affected?
I don't think so. I think the fundamentals are still very largely the same. Nothing has fundamentally changed other than the fact that liquidity has been squeezed a little by the CBN rules. But like I said, what most banks will try and overcompensate is looking at how they can actually match most of their deposits from other revenue sources.
Now, we hear there's going to be a bankers committee in December where you expect to get CBN's agenda on financial inclusion. So what are your expectations for this?
I think financial inclusion has been one of the strong pillars of the current CBN governor. I think he's really pushing to try and get this financial inclusion target for 2020. I think the meeting largely will be stock taking, where we as a bank, as an industry, since the rules have come out or the policies have come out in financial inclusion. So I think it will be an ideal time for the CBN governor and the bankers committee to look and take stock. Okay, where are we and what do we want to do? And we hopefully expect some more decisions to be taken on how we can drive financial inclusion. Now, bearing in mind we've had cash Cashlight Lagos, Cashlight in some states, 7 states, which again is one of the core pillars of financial inclusion. We've had issues surrounding charges regarding ATM and access to finance. So I think largely we will see more and more results coming in and in preparation for next year's strategy for financial inclusion.
Now, we've spoken a lot about agent banking in Nigeria. I know that I've spoken to you about that on the show before. So could you give us an update on what's going on there?
I think when I spoke to you back 6-7 months ago, we were largely waiting for the framework to be announced by CBN, and I'm happy to say maybe 3 months ago the CBN allowed or gave permission for money deposit banks to run agency banking. And as expected, there's a bit of activity in the banking sector in terms of strategizing on how they would launch their own agency banking models. A lot of thought has to go into how this will work, and I think my bank and like many other banks are looking at the best opportunity in terms of investing in technology, investing in manpower, and investing in strategies that will actually drive agency banking. We expect to see Q1 next year a lot more activity in that market in terms of partnerships with the banks, deciding how best they want to actually push this agenda going forward.
However, I mean, for this to be achieved, there needs to be, large investment in technology. So what's the bank's strategy in regards to technology?
Most banks will probably, the easier thing to do is to actually invest in technology, because most banks have to invest in technology to actually attract new customers coming into the door, especially in the agency banking area, because it's an area that we've never, as an industry, it's new territory we're entering in terms of that area. I think most banks, the only way to go to be effective and cost effective and big returns is to invest in that technology, and that technology will range from how you want to actually deliver the service to the customer at the user end in rural areas, for example, to how you want to manage liquidity issues, bringing money back and forth from those particular areas, how you want to make it cost effective to be able to service those customers. So technology, without saying, is one of the core pillars of trying to ensure that the agency banking framework will succeed.